Hi C students, let's revise CA Final AFM Chapter 8 Mutual Funds. Practical question 14. A mutual fund having 300 units has shown its NAV of 8.75 and 9.45 at the beginning and at the end of the year respectively. The mutual fund has given two options. The first option is to pay 0.75 per unit as dividend and 0.6 per unit as capital gain, or these distributions are to be reinvested at an average NAV of 8.65 per unit. What difference would it make in terms of return available and which option is preferable? So this is same as the previous problems which we have did. So in the case, as we clearly analyze, we have 300 units and the NAV at the beginning and at the end varies. There is an increase in NAV, which signifies there is a capital appreciation. And in the first option, as we can see, there is a regular income of 0.75 per unit, which is dividend, and capital gain of 0.6 per unit. This capital gain is a realized gain, but in case of the capital appreciation, it is unrealized gain. Hence, in the first option, the return will be dividend whatever is received 0.75 and the change in price nothing but the capital appreciation, and the capital gains distribution nothing but the realized gains. So totaling up to totaling will be 2.05 total reward divided by the beginning of the year NAV will be 8.75 multiplied by 100 will give us the return of NAV. Now in the second option here, which is coming up to 23.43, in the second option these distributions are to be reinvested at an average NAV of 8.64. Since we are reinvesting, we should only consider the realized gains. In our case, the dividend of 0.75 and the capital gain of 0.6 has hit our account, be a trading account or bank account. So that is what is realized gains. The unrealized gain of capital appreciation will not be considered because it will be already reinvested. Now considering the realized gains, 0.75 plus 0.6, 1.35. 1.35 multiplied by 300 will give us 405. Additional units acquired will be nothing but 405 divided by 8.65 because we will be reinvesting at this rate 8.65 average NAV. So which will give us the additional units nothing but 46.82. So the total number of units will become 346.82. From 300 it will become 346 because we have reinvested of the realized gains whatever we got from the mutual fund. Now this 346.82 multiplied by the NAV at the year end will give us the NAV, which is 3277.45. Then at the beginning it is 2625. 300 multiplied by 8.75. The difference between this is 652.45, which is nothing but the reward or return we got for the holding period. Now that divided by the beginning of the year NAV per unit, NAV total NAV is 2625, which will give us the return of 24.85. As we can see in the first option, the holding period reward is only 23.43%, but in the second requirement it is around 24.85%. Hence the second option is viable as the return is more in the case of second. Hence the option 2 is preferable. Thank you.